Stocks closed the first trading week of 2022 in the red. The S&P 500 posted a weekly loss of nearly 2%, while the Dow dropped 0.3%. The Nasdaq fell 4.5% for the week, which was its worst week since February of 2021. And squeezing the markets was a 10-year treasury yield, which rose to a yield of 1.77%. U.S. stocks were already under pressure as investors contemplated the next likely moves by the Federal Reserve. On Friday, the Labor Department's December jobs report showed that 199,000 jobs came back in December, but this was anemic compared to the previous month. And although pundits pointed to the pandemic-era low unemployment rate of 3.9%, which is nearing the unemployment rate prior to the pandemic, they fail to acknowledge that the labor participation rate is well below the participation rate prior to the pandemic. For investors, it pays to always keep an eye on what they don't want you to know. However, the green light for a rate hike in March is still on. In fact, the Fed's December meeting suggested some officials were inclined to speed up tapering and move up the timing of an initial interest rate hike. So, the wonderful year for markets of 2021 is now history. It's time to face a much more complicated outlook for 2022. However, this economy still has all the ingredients to continue growing. We just need a little luck. Today we're going to take a look at two graphs, beginning here with the 15-year monthly chart on the spiders, the SPY, and the close on Friday was 466.09. And the reason for showing this is simply that we're at this level here, which is fairly elevated above the 20 and the 50 EMA. So, stock market gravity tells you that what goes up must come down, so we need to be on guard for any move that may take us down. Into the oscillators, volume looks fine, but here you can see the MAC is starting to turn sideways, maybe the process of rolling over, as we'll see in some of the other oscillators. So we still have a pretty decent separation between the fast line and the slow line there. So that means that anything can happen, perhaps sideways trading. But as you go down here into the histogram, you can see that for several months now, we've been on notice that things are starting to erode. You'll see that erosion here in the price rate of change with that peak at that point, and then the decline to the current level. Perhaps we're rolling over. Now, that doesn't mean we're going to crash, but it does mean that there is going to be some pressure on the markets. Into the RSI, the Relative Strength Index, you can see from that peak here also a downward trend. And we've seen downward trends before, here in 2018, and then also in this time frame here. And they didn't necessarily end well. I'm not looking for a crash, I'm just looking to be on guard. Here into the stochastics, definitely looks like it is rolling over, and then the Williams as well. We spent enough time up here in that overbought territory. Perhaps we need a move on down to make the markets a little bit more healthy. But let's move on back up here to the price chart. One last look, and now let's go ahead and take a look at the daily chart. And we're now looking at a 6-month daily chart on the spiders, the SPY. And as you can see here, we had that top line moving through like that. And it looks like we reached it, and we got reflected back down here. So the bottom line, at least through the 6-month chart, is something up here like this. Maybe not all that straight, but you get the idea. So perhaps we're going to continue coming down into next week. I think that's what the probability is. I'm not looking for a crash, just a continuation of this pullback down to this level here, maybe a little bit lower, given that my line really isn't all that straight. But moving here into the volume, you can see the volume pick up on the selling, natural. moving here into the MAC. So the level that we were on the fast line was not all that high, and the slow line's not all that high either. So we're coming on down, definitely with this fast line coming through the slow line. We'll come on down here. I would imagine that perhaps we can get toward that 0 level and perhaps bottom and base. If we take a look again at this line here, again, not very straight, you get the idea, but we could come on down here and turn. That is a definite possibility. I'm not sure that's the probability. I think the probability is that we may continue on down here, maybe closer to that 0 line before we bottom and base and then turn back up again. And that could take us into next week for sure, and maybe the week after. We'll just have to continue watching that. Here in the histogram, we're definitely rolling over and then heading on down. No sign that we're slowing down yet. That's why I think we could go into the following week. Here, price rate of change looks relatively normal. As well, the RSI and then the stochastics, that indicates also we could be coming on down here. See how far this fast line has made it. The slow line is going to have to catch up. It won't. That's what it does. But we'll come on down here, and hopefully toward that 50 or midline we can turn back up again. Into the Williams, we can see that Williams has raced all the way down just at the level nearly of that oversold area right here and below. I think it'll get there into next week, and then hopefully we'll do just a short amount of sawtoothing before we can turn back up. But we'll know more next week. Really, for this week, into next week, and then perhaps the following week, it's just be cautious. Save some cash. Start building your cash. And for today, that's ChewDog Charts. Thank you.